Accenture posted better than expected earnings in the second quarter, with revenue rising over 8% to $18 billion. It's higher than the street was penciling in. The tech major also saw record new bookings at over $22 billion, a 6% increase in dollar terms. Now, Accenture has also hiked lower end of its constant currency growth guidance. It now expects constant currency growth at 3 to 5% versus earlier guidance of 2 to 5%. Shares now are up in trade despite falling initially. My colleague Raghav joins in with more details on this.
Well, absolutely. Accenture came out with quite a strong tally in terms of the results. Speaking about the revenue at first, the revenue outperformed the expectations marginally in terms of standing at $18.0 billion from a comparative figure of $17.8 billion. In terms of the reported profits at the moment, the profits stood at $2.93 per share compared to $2.82 per share on the previous year on a comparative YOY basis. Speaking about the operating margins of Accenture as reported in the press release, operating margins for the quarter were at 13.8% compared to operating margins of 13.5% on a YOY basis in the previous second quarter of the fiscal year. The operating income for the quarter increased at 11% to $2.49 billion and compared with the previous operating income figures of $2.24 billion in the second quarter of 2025. The net income for the quarter was also standing at $1.86 billion compared to $1.82 billion, which is a marginal increase compared to the previous quarter in terms of the fiscal year 2025. In terms of the free cash flow that they have accounted for this year, it has risen from $2.68 billion to $3.69, which is a huge jump from the second quarter 2026 to second quarter 2025. The new bookings that have come out and have been revealed in the press release stand for the second quarter of fiscal year 2026 stand at $22.11 billion, which is a 6% increase in terms of USD and 1% increase in terms of local currency. Also, in terms of the share for these new bookings, consulting has a share of $11.33 billion and managed services have a share of $10.78 billion. In terms of the business outlook that Accenture has come out with in a prospective term, Accenture has hiked its lower end of its constant currency growth guidance. The erstwhile constant currency growth guidance was at 2 to 5%, and they have hiked it to 3 to 5%. And the company now expects a full year revenue growth to be at 3% to 5% in local currency. Also, it has excluded the estimated 1% impact of the US federal business, and the company is now also expecting a revenue growth of 4 to 6% in terms of local currency. Speaking of the AI impact that the company is looking for, they have looked at accelerating the critical work with clients to scale advanced AI across various enterprises, and they're seeing an AI-led growth in their company, and this is what we are able to see from the press release that has come out with respect to Accenture's results.
Well, to dissect these numbers for us further, we are joined in by Sudeep Bandopadhyay, who's a market expert. Sudeep, thank you so much for joining us today on ET Now. Now, if I am looking at the numbers, Accenture has reported new record bookings, record new bookings at $22.1 billion for Q2. Yet the revenue growth guidance remains slightly modest within 3 to 5%. Why isn't this massive pipeline also translating to the immediate top line surges for the sector and Accenture?
Well, let's talk about Accenture specifically. I think they have done a fantastic job, and the quarterly numbers which they came up with are testimony to that. They have definitely started getting a share of enterprise AI spending, and that's excellent news for Accenture. They have been working on this for I think very long, and they are one of the technology companies which have been gearing up for the AI onslaught, and it's very clearly coming out from the numbers which they have announced that they will all likelihood benefit from this AI-led disruption which is happening in the industry. As far as why the numbers don't translate, I think there is a time lag between the orders coming in and that getting translated into revenue. They have anyway At the lower end of the guidance, they have improved from 2 to 5% to 3 to 5%. They are being conservative, I'm sure, and probably they will end up closer to 5% when the year ends.
Right.
I'm pretty confident looking at the numbers that they are on the right track.
Right, right, Mr. Bandyopadhyay. Also, speaking of AI revenues, now Accenture, unlike many other in the IT space, have decided to stop reporting AI revenues separately. Another thing that I noticed in the results are now embedded in the core offerings. So, is it also going forward the sign for this particular sector that agentic and Gen AI offerings are becoming a standard commodity rather than the premium margin driver for the IT sector?
Well, look, as far as AI offerings are concerned, IT companies will have to offer it because the clients will demand, and you can't expect a premium. In fact, the clients are expecting cost savings and multiple other efficiencies to be derived out of use of AI. So it's not a premium; it's a necessity. If you are a technology company which is offering your service to a large corporate, if you are not able to provide AI-led solutions, I think you will be falling behind, you will be lagging behind because your peers like an Accenture will be providing that. So I think the writing on the wall is very clear. The existing technology companies need to adopt to this environment, need to internalize the AI models which are coming out pretty fast on a continuous basis. They have to internalize, they have to start using those models to provide solutions because that's what the clients are demanding.
Mr. Bandyopadhyay, like a very fairly simple question, often Accenture earnings are described as a precursor to the likes of TCS, Infosys and HCL. So given such strong numbers, what are your expectations, from the Indian IT majors going forward?
Well, I will, be a bit cautious here because the game is changing. Accenture have moved into this AI space early, and they are probably reaping the benefits of that. A large part of enterprise AI spending they are attracting. So I won't paint all the companies in the same brush. I don't think you will find that linear correlation between Accenture results and other tech company results. Different companies are at different stages of their AI journey, and it will very clearly reflect in their numbers, which are going to be announced, soon. Also, you will find this divergence to continue in the foreseeable future till they catch up, till the other companies catch up with the technology majors who are using AI extensively. Very clearly, all companies are at different stages of this journey.
Right. Thank you so much, Mr. Bandyopadhyay, for joining us today and dissecting these numbers for us. Your inputs are always, good for us and the audience.